Alright boys, so today I have a very important video to any of you that are trying to increase your win rate using liquidity, supply and demand. I was thinking about doing this as a video and I realized that I've actually never really talked about this on my channel. So hear me out on this, stick around, I've got some good points for you. And if you don't know what liquidity, supply and demand is, I'd recommend you watch my full course video. It's basically just an alternative to supply and demand that's just way more effective and it's changing lives right now, so I'd recommend it. But yeah, let me just get into my first point. So the first thing I'm going to talk about is valid liquidity for different price structure. So let me quickly explain what I mean by that. Basically, if you trade liquidity, supply and demand, you probably know that 2-candle liquidity is usually the minimum we look for in order to have valid liquidity. So let's say we create our demand zone, we have 2 candles coming down right here, and then we break the high. This is a valid zone for us. We have our demand zone, we have our level of liquidity right here. And in any situation where we just come down to it like this is a very nice zone. This is textbook. A lot of the time this can be considered A+ if it's like, you know, with trend and everything. However, what people don't really realize is how important the price structure after breaking this high is in making this a quality setup. So like I said, if we come down, then this is beautiful. But if we continue up, let's say we just, you know, do basic market structure, you're just thinking, oh, it probably won't come down to our zone. But if it does, then I can still take it. And technically, this is still valid. This zone still has its liquidity. Let's say it's within 14 days. If this comes down right here, it's technically valid. And I'm not saying I'd never take a setup like this, but it is much more unlikely than what I'm going to tell you in a second. And the reason that this becomes an issue for us is because we are now creating very major structure. If we have a setup like this is very minor structure. We'll come down to our zone. Investors still like to buy at these zones. They're very common zones to win from, but usually these are a part of a bigger move. So this can just be like part of a continuation of, you know, major structure. However, when you're trading the major structure, such as a trade like this, we like to see it break a major low. That's the simplest way to put it. If you're creating major structure, you want to break a major low, because when you're making massive moves like this, price doesn't really care to take out 2 candles of liquidity. So with a zone like this, yes, we still have 2-candle liquidity, but price has moved past that now. Price will likely want to take out a major low before coming to the zone. Price is no longer looking to take out this 2 candles of liquidity because it's so insignificant to the major structure we're forming right now. So this is a great example of major structure being created with a very good level of liquidity. You can see we came up, made our demand zone, made our level of liquidity right here, came up. Sorry, I've marked this a little bit wrong. This is actually the valid break of structure we'd need, but I still think it was very important to break this high to the left here. We came up. This is very major structure. You can see this is the highest we've reached in a while. And we came down very directly to the zone, took out this level of liquidity and went up. This is basically an A+ setup. This is a perfect example of the strategy. This is what I'd show someone if I was telling them about the strategy. So right here is a great example of a setup that I know a lot of people would take. People send me setups like this all the time asking if I'm taking it or something. And yes, it's technically valid. Is it good? No. I wouldn't take something like this. And the reason for that is that we are creating very major structure. You can see that just this whole move right here is very major. This has created a whole new low for the first time in, you know, months. And it has come back up to our zone, even though it's done it quite cleanly even. We have not taken out a good level of liquidity. What we'd be looking for is for it to come up like this, and then come down here, and then come to our zone. Because we've taken out a major level of liquidity, we've taken so many people's stop losses right there. There is such an insignificant amount of liquidity right here for this major structure to care about that it doesn't really matter anymore. And as you can see, we did just immediately break through it. But I just know that a lot of people look to take zones like these, and this will increase your win rate by a lot if you just don't take these types of setups as much. Sometimes it is still valid, it depends what the situation is. It's not just complete law. But something like this is an absolute no-go. This is yeah, this is not good. But before I get into my next point, I just want to quickly say I have just opened up my own VIP Discord, and I've already made videos on all this stuff and even more depth in there if you're interested, as well as a bunch of other stuff. I'm also answering everyone's questions in there. This is where I'm the most active. I'll be sharing my own trade ideas, doing webinars every week, and yeah, if you're interested, then the link's in the description. But yeah, back over here, my next point is on structure coming down to our zones. Now, I've talked about this a little bit on my channel. Basically, just in live trades, I'll be like, oh, this is nice, it's come down in a straight line, but I've never really talked about it that much. Once again, this is in more detail in the Discord. When we have our zone get created, once again, we have our level of liquidity, we break our high, we've got a valid zone right here. This doesn't necessarily mean we will take it. Even though right here this looks beautiful, it's still not guaranteed to end up beautiful. Even if we don't go up higher and do all this, we've still got some other things that we can think about to increase our win rate here. So when else would you not want to take a trade like this other than, you know, key areas? Well, it's just when we're starting to move bearish. It's pretty simple, but if we're moving with bearish market structure down to our zone, it's an indication that we might be moving bearish. Even more so if we're coming down, you know, bit of bearish market structure. We create a supply zone and we begin reacting from supply zones on the way down. This is a decent sign that investors are looking for sales. If investors are selling at supply zones, that means they might not be looking for demand zones anymore. And as supply and demand traders, we're just looking to get a piece of what the investors are doing. So if we're coming down, reacting from supply zones, and then we come down to our zone, there is a high chance that we just, slowly break through it. You feel me? We might still have some bullish candles, we might still react a little bit. Some investors are still getting them because it's still an area, but also it could just be a little retracement to continue bearish. Now there are extents to all this. Just because we're breaking lows and not breaking highs doesn't necessarily mean that we're not going to take it if it comes down like this. Even though we're creating lower highs and lower lows, we can expect that, especially on bigger moves. Chances are it won't come down like this. It doesn't always come down in a directly straight line because markets need to retrace. But when it does do this, it is a great sign. Because, like I just said, markets need to retrace. This ain't just gonna keep doing this, you feel me? This is likely gonna come down and then reject. If it goes bullish like immediately, then it's probably because markets need to retrace by now. We've just dropped this much and markets have barely done anything. Even like I said, if it does do this, we've still got a lot of area to correct right here. And with no indication that we're going bearish with market structure or reacting from supply zones, this is what we love to see, because these zones win probably 70% of the time with an average of 1 to 6 risk rewards, which is outrageous by the way, but A+++ setups, can't say that happen every day. You won't get a setup like this all the time. Or this is absolutely beautiful. But if you do see a setup like this, as you can see, we did come up. This is just a normal retracement though. But if you look at the bigger picture, we are going bullish. We've just come from this big drop, but even right here, this is an area we need to fill. And you can see we kind of filled that in perfectly and then went down. But it is almost always enough to at least make it to the high, which in this case is a 1 to 10. And most cases with big market structure setups like this, it is usually a 1 to 10. But you can see right here, if we're starting to move bullish, we're creating higher highs and lower highs. Sorry, higher lows. We're just most likely going to break that high. It's just market structure. Trend is real. It's not a fake thing. Once again, I've literally just done a video on trend on my VIP Discord. It can be simplified pretty well. It's not that difficult to understand when you kind of know what's going on. But right there, just between those two things, you can increase your win rate by quite a lot. And not to push it, but I do talk about some other scenarios of how you can come down to the zone and when we would or would not take it in there. But yeah, my next point is something very simple. Enter on the directional close, especially if you're trading Forex pairs mostly. Generally, the safest thing to do is entering on the close. I know I talk about flip entries a lot and a lot of people try and master them and whatever, but especially on Forex pairs, it is just so much safer to just take the directional close of the candle. Especially for beginners, I'd recommend don't bother with flips. Unless you're trading Hong Kong 33, then probably do, to be honest. That has gone crazy with the flips from backtesting. It seems to work just most of the time. But other than that, yeah, close of the candle is the way to go. Trust me, your win rate will be so much higher than if you're trying to do all these flips on trades that might not even be valid for flips. And finally, include TP1s. A, it'll improve your psychology. B, your win rate will get higher. Say I had a TP1 right here on a trade like this because it's a 1 to 10. It'd be quite likely that we would have it here, to be honest. But you can see we literally hit that TP within 5 candles, 6, 7 candles. It's kind of hard to tell with this gap here, but A, you no longer have to stress about just having 5% just go to nothing because your stop loss will be at break even. You will have already made however much percent, but also for the chance that it does lose, which to be honest, most of the time it does just go straight to TP2, but the times that it does lose, you've secured a few percent there. That is very solid, you can't complain about that, and your win rate will go higher there. I mean, that's an obvious point, but I think it's very important for people to actually do that because a lot of people just get greedy. They just look to get their TP1 at the fucking all-time highs, you feel me? No TP1 included. But yeah, I think that's about it for this video, to be honest. This is probably a short one, but these are actually very important points that I kind of haven't really talked about in depth before, so I thought I should definitely talk about them. But yeah, feel free to join the Discord. I'll answer any of your questions in there. Like and subscribe, I guess, and I'll see you in the next one. Peace.